There's a house price collapse coming. Are you ready? Check out this video as there are some worrying times. Or not, as a case may be. Check out this video. Hi everyone, my name is Simon Michevich from Optimised Accountants, and in this video I'm going to be talking about the house price. Are we facing a collapse? Is a recession inevitable? Will house prices go back to the 1930s? Well, let's check out some data, because there is a lot of videos and media, I should say, that are scaremongering. They are telling you all sorts of horror stories that property prices will collapse, but they don't tell you by how much and how it will affect you. And then once the recession is done and dusted, what that will be. People are looking at this as a doom and gloom factor, and it's then forever. And it's not. So I want you to all just take a breather with me. Because when you look at the data, you'll start to realize, yes, there is going to be a downturn at some point. What goes up must come down. There is a great advert about that. But what I want to think about here is the fact that we are looking at house prices. And interestingly enough, people will talk about collapse and so on like that. This is data that's just come out, and obviously when you look at the Office of National Statistics, we're always out of kilter. So I'm doing this video in September, but the latest information I have right now is June. More updates will come about, but here's the data for that. So UK house price in July was 286,000. Average house price in the UK January 2015. This is what the graph is showing you. It is going up, people. It is going up, and it's going up still. That's the headline. So is there a house price crash? All right, we're talking about now July, August. What are those house prices going to be? We will be producing those videos in due course. As soon as updates come out, we will be producing new videos for you. Some big headline numbers on there. You can see average house price in the UK was 286,397. Annual change for property in the UK was 7.8%. So they have gone up by 7.8%. By the way, just a quick snippet here, but people are talking about a deflation, a correction in the property markets, if you like. And what they're talking about here is the fact that property prices may well be closer to 7% reduction. Okay, now if that's the case, all that it's done is wiped out this year's inflation of property. Has it done much more than that? No, if what the experts are saying is going to be correct. And then on the right hand side, you can see there, pause this video please, the source of information is there for you anyway. But you can see there that the annual charge is, in terms of England, is 7.3%. The biggest increase, funny enough, in terms of house prices is in Northern Ireland with 9.6%. Go figure. I was not expecting that. But have a look at this data information yourself. House prices. What I want to do with this graph is really just bring people back to earth a little bit, because I want to share with you the average house price in 1980 was 20,897, and yet we're now looking at kind of December 2020, just to keep in comparisons here, of 247,000. Now if house prices go back from 280 to that 247, which is the worst case scenario, it's still going to be greater than it was a decade before. And the property prices will be, in 10 years time, will be more than right now. Now, people will say, you're crazy, you're nuts, you don't know what you're talking about. And absolutely, I can understand that. So what I've also done is I produced this slide, which helps you understand where we are in the recession. So the middle part is the recession of when the recession hit and what happens to the house prices. And you've got the types of recessions. We had the 1980s recession, we had the 1990s recession, the 2007-2008, which is the Merrill Lynch and all the banking collapse recession, and then the COVID collapse. Okay, so you see that the house price is there. But what I want you to notice is that in the 1990s, the house prices before the recession was 58,250. That seems a really low number, doesn't it? And that was in the 1990s, people. So what the house prices now, in 30 years time, will be more than whatever the recession happens to be. In the recession, it was 58,000, but look at this. It dropped slightly to 57,086, 3%. Ooh, 3% drop. And yet, a decade later, it was more than double again. Can you see a pattern here, people? Hopefully you can. People are scaremongering that property prices go down, but do you know what? This is a long-term game, and we have to remember that. 2007-2008 recession, 181,000 was the average house price. Before the recession, 182,000. Did it drop by much? Not much, really. However, after that, we had the major impact of the banks collapsing. This is the recession where the house prices dropped, but it's not the same type of recession that we might face this time. That recession was all because the bank and institutions gave out money willy-nilly, that's a nice phrase, willy-nilly, to all and sundry without really doing due diligence. They just signed off mortgages and then they collapsed as a result. And, well, so they deserve that. So straight away, the house prices did drop by 15%. That's not going to happen this time. There's any recession going forward, the banks have now got a good, strong balance sheet. Okay, they really are financed up, so we will not see that again. But then we had COVID, and the house prices before on the recession of COVID was 232,684. By the way, look at the way that the house prices are in COVID compared to all the other recessions. Can you see a pattern? I'm establishing that word pattern for you so you can understand that even though there is a recession about to come, you know, it's not forever. And then house prices actually, after COVID was 241. We had the tax incentives, etc. And now we can see that house prices went up by 4% after the recession. So there you are. So is the recession the doom and gloom? Yes, of course, it's not good news, but is it going to be forever? Will it cause you to financial ruin? No, you just need to weather the storm is my answer to you on that. So please don't panic. Here's a report, the UK House Price Index. You'll notice that this is 17th of August. I'm hoping that there will be coming one soon in September. I will produce a video on that in due course. Pause the video to get the URL. The ONS average house price increased by 7.8% over the year to June 2022, down from 12.8% in May 2022. So we had a spike. Now, does that mean there's going to be a correction in the market? Well, house price is still increasing. Is that increasing now begin to weather away? Time will tell. Despite house prices increasing between May and June 2022, annual house price inflation has slowed due to the rise in prices seen in 2021, and that's June a year earlier, which was the result of the tax break. So we're looking at different comparisons. So when people talk about house prices really significantly going up, and yet now they're really slowing, that's a sign of recession. No, that is a sign of government incentives in 2021 reducing stamp duty land tax. We are not going to see those increases going forwards, not just because of the recession, but because of the tax breaks. So again, we need to be careful of people looking at data and misinterpreting it and saying that this is caused by recession into the slowing of the house price. No, there were tax incentives, there was handouts from the government in terms of COVID. So they are not with us anymore. So people's spending patterns are going to change, inevitably. ONS, the average house price was 286. Yep, we read that, which is 20,000 than this time last year. Again, you know, if we do see a 10% reduction, that's 28,000. So it's wiped out last year's figures and a little bit more. But again, I will stress that that is a 10% reduction, which is far more than the experts are actually saying. The average house price in England increased by 7.3% over the year to June 2022, down from an increase of 13% in the year May 2022. The average house price in England was a record level, 305,000. Average is a record high in June 2022 of 305,000. So, you know, property is not one of those commodities that is quickly affected by recession. And I know people are saying it's doom and gloom straight away and you almost panic. But that frenzy, that psychological, I must react, and please note the word react as be proactive, but just react, of doing things that really you don't need to do, in the vain desperation that something around the corner is going to come and hit you, when it may not, to a level of degree that the media are telling you. And that's what I want to get across to you. Here's again from government website. The URL is there. Please feel free to use that. Pause the video. And they produced UK House Price Index Summary in June 2022. A new one is coming out. Again, you can see it's published in 17th of August. I will get a new update one as soon as it comes out. But they said the Royal Institute of Chartered Surveyors, which is RICS to you and I, June 22 UK residential market survey reported that results point to a softening in demand at the headline level. Softening of demand. But again, don't forget, we talked about tax breaks, stamp duty land tax, and now we're talking about people worrying about recession. And by the way, I'm not saying at all people straight away commenting, saying that you're a bozo, because that's Boris Johnson, but you don't know anything because a recession is inevitable. I'm saying is that how much will the recession hit you, and could there be things that you could do now to protect yourself that if there is a recession, that you are not really going to be that affected. Okay. HMRC, the property transaction statistics showed that in June 2022, a seasonal adjusted basis, the estimated number of transactions in residential properties with a value of 40,000 was 95,420. This is a 54% lower than a year ago, which is quite a substantial amount, 54%, wouldn't you agree? So again, is that because of tax breaks, and is that now because of people worrying about the economy? There could be a mixed bag, but I think that when I saw the tax breaks of stamp duty land tax reduction, holiday period, that jumped up in terms of transactions to record highs. So I think it's really an unfair comparison to what about 2 years ago? What about 3 years ago? What you will find is that the comparisons to those data was pretty much flat. It's just the fact that we had this spike, and that's all. HMRC also go on to say the Bank of England Money and Credit June 2022 release reported that mortgage approvals for house purchasers on indicator of future borrowing decreased by 63,700 in June 2022. Again, from the previous year, right? This remains below pre-pandemic. Duh, of course it's going to be, because again, the tax breaks, stamp duty land tax was all removed. A lot of investors were buying properties. It's inevitable that we're going to have that spike in 2021. It's just an unfair comparison. But when people read this, they'll think, oh my gosh, it's a crisis. It's not a crisis. It's just the fact that it was an obvious spike in the market in 2021. And again, please don't write in the comment, you fool, there's going to be a house pricing adjustment. Of course there is. But I'm just saying that a lot of this is fueling a lot of emotion, which just doesn't need to be there. Once you understand the data and where it's come from and the facts behind it, then you will understand and appreciate, yes, there may be some changes, but it's not as doom and gloom as what people are painting right now. What I want to show you now is where the house prices are, kind of looking at different countries where house prices, and this house price volumes, I should say, of sales on the left hand side, and on the right hand side what I've done there is the monthly changes. And the monthly changes, these are April numbers, really out of date, but that's just what we have to hand from the Office of National Statistics and HMRC. So not really too helpful, other than to say, well, there is no sign of decrease yet going forwards. Rightmove produced a report as well. The URL, really interesting actually. Do keep abreast of what Rightmove is saying. They do have some very good analytics. So it's a good source of information. So let's have a look what they said. Price of property coming into the market sees first fall this year, down 1.3%. So when people are saying there is going to be a correction, yes, here it comes. There is definitely going to be a correction. I have never said there's never going to be a correction. But it's just not the magnitude that people are talking about. The 1930s collapse, no, it won't be. Trust me, it won't be. Prices usually drop in August. There you go, holiday season. So is that another factor? So people are looking at recession, looking at comparisons last year. Don't do that. That was because of tax breaks. Now we're looking at August, the prices are dropping because people are on holiday. And there we are. People do have less money because they're spending money on the holidays, coming back to work and so on. There's just less demand in the market, but that's expected. That's a seasonal fluctuation, and that is all it is. However, again, there is recession. People are going to be worried. So will they be buying houses? Let's wait and see. Buyer inquiries to agents are down 4% on the hot market of 2021. 4%. Not much change. People are saying demand and supply. Oh, there's no demand in there. Actually, this is on latest information in August, and they're saying that it's down 4% from last year. That's not a sign of significant decrease, is it? But remains 20% higher than 2019, which is a great comparison because it's not looking at 2020, 21, it's looking at 2019. Sellers want or need to move quickly at this time of year to price competitively in order to find suitably buy fast, with some hoping to complete their move in time to joy for Christmas. To achieve this, they need to beat the current average time between accepting an offer and completing the sale of 4.5 months. Nevertheless, we're still expecting price changes for the rest of the year to continue to follow this usual seasonal pattern. They're not expecting anything else or anything different, which means we'll end up around 7% annual growth even with the wider economic uncertainty. 7%! And people are saying, and that's growth, not decrease, growth, 7%, and people are saying, this is the end of the world. Huh? I'm just not seeing any of this. I mean, I'm comparing prices now to 2020, 2010, and I'm just not seeing this end of the world Armageddon. I'm just not. And maybe that's a good thing, because whilst people are selling their houses really cheap, as a property investor, I might just pick up some properties on the cheap. Maybe that's not a bad thing for me, but on a wider scale of things, I just don't want this panic going on. I really want people to look at this data, hard data by the way, rather than just some speculation that they put out of a crystal ball or media giving you a frenzy because of headline emotional titles that then sends you into a panic. Don't. Just look at the raw data. Okay, so this is Mail Online, and they produce an article, again, gets the URL. House prices could plummet by 7% in the next 2 years as mortgage interest rates and cost of living soar, experts warn. 7%. We're not talking about 20, 30%, where people have talked about the media. And I appreciate this Mail Online, but there is some commonality between what the Mail Online have said versus others. Daily Mail, but sorry. So they've said, amid concerns that a day of reckoning looms. A day of reckoning? That's the type of language that says a day of reckoning. You're at the pearly gates and you are going to be kind of punished. Well, hold on a minute. That day of reckoning is really a strong term. Analysts predicted a 7% over the next 7 years. So again, 7% in 2 years, with London and South East hit even harder, but not the North, which is really interesting. In London, we are seeing this kind of decrease in demand and sale because house prices are high. And is it going to be the economic centre of the universe? No, not with remote working and people now begin to do different things. The property market has boomed since the pandemic, again, because of the tax. Stamp duty land tax holiday period, with prices reaching record highs. Actually, June 2022 is a record high, so please note that. But signs of a slowdown already emerging. Forecasts for 2023 are increasingly gloomy. Again, the word gloomy. So what did the Express say? Again, they produced a house price crash. An emotional word, people, please. What's a crash, really? What's a definition of a crash? Please put in your comments below this, because I'm sick and tired of reading crash and collapse and people just saying, not even providing a definition of what that is, or even a comparison to 2020, 2010, 2000, 1990, all those recessions I've just given you the hardcore data for. Is it a collapse? Was it the end of the world? No, it just wasn't. I think we just need to take that breath again. Just take the breath. It's all right. Okay, so what did the Express say? Houses will sit empty for a long time in the event of a market crash, as developers are more likely to want to see a return on their investment rather than shift properties at a loss, an expert says. So what does that mean? Will new house prices drop? Well, not if that is what's to say. And again, developers know what's going on. If there's going to be a crash for of 7%. By the way, house prices have gone up by 7% from a year ago. So it's just going to wipe out 1 year's profits on those house prices. Just 1 year. Okay? Not 10 years, not 20 years. Okay, there are people commenting on saying, Simon, you don't know what you're talking about. House prices are going to be in the 1920s. What? £500? Come on. So, please don't correct that, because I think you just need to calm down a little bit. I'm just giving you the raw data. You can make your own sensible comments about this. But all I'm just saying right now is that this is a lot of advice from property developers to really make sure that house prices don't collapse too much. They don't want to lose money. They're quite happy to pay the interest because bank interest rates 2-3%. Will they pay that for an entire year rather than lose 7-10%? Of course they will. They will expect to ride this out for a couple of years and get that profit back. When house prices go back out and we're out of this recession, which, by the way, we will be out of a recession. It's never forever. Nothing ever is. So in that case, that if the developers are holding onto the stock, they won't want to sell it on the cheap. That means that house prices cannot drop too much, especially for new properties. House prices in the UK have grown 60% in the past decade. Okay, not, is that 60% really going to be dropping by 10%, 20%, 30%? Unlikely. So the cost of living crisis puts pressure on family finances. Experts are predicting a dramatic downturn by maybe on the constant. Dramatic? 7%. Yes, that's a decrease, but dramatic? I mean, dramatic for me would be a 20-30% decrease. What's dramatic for you? What would constitute the word day of reckoning on house prices and so on? If you live in a home right now, you own it. It's your home. What is the day of reckoning? What is the crisis? What is the meltdown valley going to be? Is it going to be 5%, 10%, 15%, 20%? Tell me in the comments box below with regards to what level constitutes as a day of reckoning, because that'd be really interesting, because this word dramatic, it's just a very good emotional journalist writing, and to be honest, it's scaremongering. Bloomberg is putting house prices fall for the first time in the year as crisis bites. Crisis. Again, another emotive word, crisis. And I even put that in my own titles, by the way, because I know that people will read it and people will say, oh, I told you so, quick, let's read this media. And then they don't look at any data that supports this argument at all. And actually predicting the future is very, very difficult. Now, I'm not saying, by the way, none of this has any backing at all. What I'm saying is, how can you predict the future? All I can do is look at the past and the past recessions and how that really impacted us. Bloomberg says UK house prices declined for the first time in a year in July. Yep, we know that. As interest rates and soaring inflation finally took a toll, with the slowdown forecast to deepen in coming months. And that, I understand, a slowing of demand. We're not seeing it because Rightmove said in August, actually, that's seasonal fluctuation. And it was expected, but it's still a lot higher than they expected in 2019. Prices fell by 0.1%. Sorry? Prices fell by 0.1%. All right. Crisis. Crisis, people. 0.1% crisis. Come on, jokers. Leaving the average cost of home, $293,000, Halifax said on Friday. Values were still 11.8% than a year earlier, but the pace increasing is fading. Crisis. House volumes, and I'm going to pretty much stop on this one, but this is the volumes, house volumes of sales. As you can see, July 2022, house volumes, have they decreased? No. Okay, so, what's your thoughts on all of this? Please do share those comments with me. Really interested to know. But again, I just want to calm things down a little bit. Even if there is a recession, yes, there will be some negative pricing on price of homes. But if it's 10%, it's 10%. Yes, it's a big deal. But ultimately, will we see in 10 years' time, look back and say, well, actually, that 10% drop, we've just got another 50% increase. Where's the worry here? I think it's just about riding the waves, going through that storm, and then coming back at the other end calm, collected, and profitable. That's all I want to share with you today.